All right, good evening and welcome everyone. This is day 2 of 3 days, and we've been talking about order blocks and how we can simplify trading. And like I mentioned to us yesterday, whatever we are discussing right now, we will be bringing an even easier method to do all of these things, right? Very, very soon. Um, a method that I have no doubt can make practically anybody profitable if you apply yourself to it. However, the pips are counting, the ticks are moving. We will continue with what we have until we launch that out. So yesterday we discussed, I'll quickly do a recap of what we discussed yesterday in about 10 minutes, and then we'll move on a little deeper. Yesterday we looked at asymmetrical risk reward ratio, right? We discussed that briefly, and today Prof went ahead to provide this this Excel sheet for us that basically helps generate random outcome. And if you are here and you still believe that your strategy can tell you exactly what price will do with razor precision, um, I would assume you're a newbie, right? Every profitable trader knows that the market does what the market will do, and you only play within the confines of your edge. So this Excel sheet gives us random outcomes, very, very random for that matter, right? So if I'm risking 1% per trade, if I lose the trade, I will be losing 1%. If I win the trade, I'll be winning 3%, right? There are several methods of asymmetrical risk reward ratios. There's one that will be teaching specifically for the fostering program once they're done with their competition. But for this, for you guys, we're discussing 1:3. And I explained yesterday that I would want you to do it 1:3, step 2, at least a step 2. Meaning that once I have 2 winning streak, I revert back to 1:3. So what this means is that if I take the very first trade at 1% and it's a winner, my account will be up 3%. This is equity, right? Now, because I'm up 3%, I would traditionally will risk only 1% per trade. So the next trade, I'm going to add this 3% to the 1% I would traditionally have risked. And now I'll be having 4%. I'll be risking 4%. But because it's ratio 1:3, that means I'll be risking 4% for a possibility of taking home 12%. And if this works out, I will invariably have made 15% on my account. And if it was a loser, if this was a loser, then I'll be down just 2%. Now, what I want to see here is the asymmetric nature in reward. It's not symmetrical at all. Symmetry means like it's almost equal, right? 1:1, 2:2. These are symmetric in the sense that if for every win I am rewarded multiple times, then I'll be punished if I take a losing trade, right? So here we have this Excel. The very first 2 trades here were losers, and the cumulative is my equity, my drop in equity in percentage. So as at this level, we have 2 losing trades, and cumulatively our account is down -2. Then the third trade happened to be a winner, and now I'm winning 3%, and my account is up 1%. Now, take a 25 random trade sample. If you have watched the video by Mark Douglas on our YouTube, you will understand why we chose a 25 trade sample. The theory is that after 25 trades, you should be able to know if your strategy works well or not. And if it isn't working well, you have the opportunity to tweak it a little as at that point in time, right? So for these 25 trade samples, we basically had 11 winning trades, right? 11 winning trades out of 25. And that means our win rate is just 44, just 44% win rate, lower than the average. However, this account grew by 43%, 43% after 25 trades. Notice also that we had winning streaks. In fact, the very first trade, out of the very first 9 trades, we won only one. Out of the very first 7 trades, right? Out of the very first 7 trades, we had just one winner, right? And I know for many of you here and across the world, of course, not picking on anybody, most retail traders, when they have one winner out of 7 trades, they will look for the nearest dunghill, throw the strategy into it, and cover it with a caterpillar, right? Never to return back to it, simply because you had one losing trade out of 7 trades, right? But it turned out that this account would have grown by 43% if we use this asymmetrical risk reward ratio. Namibian gold, I think I have to find a way of stopping annotation. Just a minute, guys. All right, so let's move on. So you notice also we had, if you had run out of this strategy simply because you had one winning trade out of 7 trades, then you would have missed out on 1, 2, 3. You would have missed out on 1, 2, 3, 4, 5, 6 winning streak, right? But we're not discussing psychology today. So now notice, if I pull this, it's going to give me another random sample. Now it's giving me another random sample, and this time the account is up 25%. I'll do this 5 times. So we have 2, and the account is up 25%. Another random sample again, and this time the account is up 56%. Oh, let's have the last 2 random samples. Random sample for 25 trades, and the account is up 23%. Now the very last one, random sample for 25 trades, and the account is up 69%. If you love what you see and you feel it's something you want to give a try, please put a 1 in the chat box. Just put a 1 in the chat box. If you love what you see and it's something you want to give a try, put a 1 in the chat box. Thank you so much. Now, the problem now becomes that of finding a strategy that can easily make you get a 1:3 risk reward trade. And the issue is because if your risk, which is your R, if your risk is 30 pips, it means you're putting yourself in a situation where you are hoping to make 90 pips return. Several retail traders spend a lot of time on 15 minutes and even 1 hour and even 5 minutes. Some go as low as 1 minute. And because we spend so much time here, retail traders spend so much time here, they find it difficult to see the larger picture. They find it difficult to see the larger picture. So you might be trading the pullback and price comes back and turns against you. So we concluded that to help us make this easier, we would want to spend more time trading off the higher time frame, right? And that took us to trading higher time frame order blocks. And we narrowed down on weekly and daily. Of course, you could trade the monthly too, but we basically narrowed down on weekly and daily. So yesterday, I remembered we had an example on EN. Yeah, I think we had an example on EN. Just a minute. Let me see if I can call this up. Yes, we had an example on EN that played out live in front of us yesterday. If you remember, I told you guys I took a buy of EN when it came into this untested order block. And I said I took 4 take profits, but I needed to be sure I had something running to show you guys an example. So I left the second trade running. And yesterday I told you guys that once price traded to this region, I should have been thinking of exiting the trade or trading my stop loss even tighter. Now you can see price traded straight into that OB and dropped, right? We don't need to know if there are equal highs or blah, 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 at least as at yesterday, what we discussed. We just want to trade OB to OB, right, basically. And here you can see several examples playing out. So we had this massive drop. If you go down to 15 minutes, which we did yesterday. Yep, we did that yesterday. Just a minute. Yep, that was the touch of the order block. It just kissed that order block and then price went down. We would be looking at entering this trade once price broke this last box here. And then we would be moving downwards in a sell. And if you missed this where you had a re-entry somewhere here, which would have also given us very sweet risk to reward ratio. So let's say you had your re-entry somewhere here, you would have had more than 1:3 right about now. So for the purpose of those who are not around, I will use another 1 minute or 2 and just do a quick review on what we discussed yesterday. So somebody mentioned USD Chef. That was the second pair that was mentioned yesterday. And we use USD Chef for our example. We can start practically anywhere in the chart. We can start anywhere. Let's even take this area where we had a lot of whipsawing, right? So this is a bullish candle, bullish engulfing. Call it demand zone, call it whatever you want to call it. But it's a daily, in the daily. When price traded back into this region, and I'm talking about this is a bullish candle. This one here, this is a bullish candle traded through. When price traded back into it, you'll be looking for reasons to sell. But price also traded back into a bullish candle. And I remember mentioning that yesterday, that you could trade even in consolidation using this strategy. I also remember mentioning that you should look for clean setups. So if you had marked up your chart at the beginning of, at the end of Asia session, and you can see something that looks like a bearish order block and just few pips in between and a bullish order block, that will not give you an opportunity to make 1:3 or 1:2. You could just let price play out for some days, and you will get an entry. But if we try to chase price, then we get in trouble. But the slogan is, I will not trade outside an order block. I'll only take my trades from an order block, and that is the slogan. But and we also mentioned that price will always react when it's inside an order block. The reaction may not be massive, but you should expect a reaction most of the time, and that's what happened here. This is a very bullish candle traded through, right? Price traded back into that bullish candle and then dropped. But this red candle, the bearish candle, also traded back into this bullish candle, and there you see the push to the upside, right? Looking at price action here in the eyes of the new strategy we'll be discussing soon, I can just smile because it's even much easier. But let's move on. Now, so price traded through, price traded back into this bearish candle, and you'll be looking for reasons to buy, and that's the buy, right? Price traded through this bearish candle at this level. Once price trades back into that region, again, you only be looking for buys, no sells, right? Then price traded back, traded through, came back into this bearish candle, and you'll be looking for reasons to buy. Even if Donald Trump, even if Biden joins your Telegram group and says USD Chef is selling, stick to this pattern, especially if you are new. Price is trading down into the order block. We'll be looking for reasons to buy. It's easier to say this now than actually putting it in practice, because believe it or not, this bearish candle that looks more like a hammer right now would have been a full-blooded red candle, full-blooded bodied red candle, as at the time we would be looking for reasons to buy. You need to be practically insane to be looking for reasons to buy when price is pushing down in a heavy bearish momentum. And unfortunately, very few people are insane when it comes to the trading world. Most people are, okay, and that is why most people lose. The few who are insane are the guys who would be buying when price is selling, right? Again, I'll explain that this hammer would have been a bearish candle like this. Let me annotate, so in case this hammer here would have been a full-blooded bearish candle. It looks something like this. As at the time, you and I will be looking for a framework to help us go into this buy, right? So you need to backtest, you need to see it happen live to give you confidence to take this trade, right? We'll move on again. Here we see price trading back into this region, right? This candle. And when price trade into this candle, we're looking for reasons to buy. We could get stopped out once or twice or even 3 times, but we don't change our bias simply because we got stopped out. If we get stopped out and we'll have another entry, we take it. When we get stopped out again and have another entry, we take it. We will not consider sells until price breaks this region. We will only be looking for buys. We will not consider sells. And you need to understand that looking at this asymmetrical risk reward ratio, you could have had 3 losing trades back is to back. That doesn't stop you from having a positive account thereafter, right? You could have had, oh, this is another one giving us 73. Let's leave that. I need to see one with several losing trades. All right, so notice this, we had 3 losing trades back to back. You could have had 3 losing trades back to back. If your setup appears the 4th time, take the trade. Take the trade, right? If you watch that video, Mark Douglas, he practically shouted when it got to that point. He says, when your trading system gives you is set up. Take the trade, don't think. If you remember the way he said it, I can't remember, I'm basically paraphrasing, right? He said that and he was saying it at the top of his voice because our minds begin to play pranks on us that because we've lost twice or thrice, then we should go take a nap. Most times when you wake up after a nap, price would have moved on, right? Price would have basically moved on. Stop thinking. Yes, that was what he said. John Michael, you actually listened to. He said, stop thinking. Yeah, stop thinking. How many of us by thinking? it was Jesus that said, how many of you by thinking can add a cubic, just grow by 1 inch, right? Stop thinking. Just take the trade. Take the trade until price violates your purpose for thinking of a buy, right? So price trades, we look for reason to buy. Now notice this, we have this bullish candle and price traded away from it in a bearish stance. When price approaches this bearish order block, we will be looking for reasons to sell. We might have got stopped out. We might have gotten a reason to sell. We just want to stick to the strategy. I also remember mentioning yesterday that if you are able to discover the trend, and in this case, it is clearly bullish, then every counter trend you take will give you just few pips. So you should be thinking of scalping a counter trend, and in fact, not using a 1:3 risk reward ratio when you are scalping a counter trend. You might not get, and I'm using the word might because it's possible for you to catch the trend reversal. You might not get price moving heavily against the trend, right? But in this strategy, you can actually trade either way, for or against the trend if you are trading from a higher time frame. Now, so I'll stop here so we can go more. So I believe we've done enough of a review with 30 minutes in, with 30 minutes left to go. All right, so the next thing we'll be discussing is a concept called LSB. That is the general term. We'll soon be having a change of nomenclature for most of these things, but we'll call it an LSB, and you permit me to annotate here, right? If you've been in SimplyPips for a while, we have a trading rule, and the trading rule is this: buy when price is buying. And how do you know price is buying? You only know that price is buying when it starts buying. Then when should you get out? When it starts selling. How do you know price is selling? When it actually starts selling. And for the sell, we say sell when price is selling. How do you know that price is selling? When it actually starts selling. When do you get out? When price starts buying. How do you know that price is buying? When price actually starts buying. We don't try to predict with precision where price will make a U-turn from. I know some strategies do that and do that with very nice results. But if you are still struggling to make profits, don't try to catch the tops and the bottom. Just follow price action, right? So we have a concept called LSB, and I'll give a brief of what LSB is all about. If you are in an uptrend, say price is pushing in an uptrend like this, and this uptrend happens to be on a higher time frame, like the daily, like the weekly, you would have other blocks somewhere around here, here, and here. You have other blocks responsible for the push to the upside. Now, in the lower time frame, this correction in a lower time frame will look something like this, right? Creating lower lows in the lower time frame. We will be looking for opportunities for when price will break structure, right? And that is what we call an LSB. We'll be looking for price to create a higher high in the lower time frame that has been creating lower lows. So the lower time frame has been creating lower lows. We will be looking for when price will break structure and create a higher high, and then we'll be looking at taking our buy from here with the stop loss 180R below the low. This is the concept of LSB. Now, there are other ways of fine-tuning this even better, where you look for price doing this in what we call kill zones. We'll discuss that tomorrow. You're also looking for where price will do this at yesterday's high or yesterday's low, as the case may be. We'll also be discussing this tomorrow, right? But today I'll be explaining LSB, showing us some examples of LSB. I will round up by discussing some candlestick patterns that we will use to crown up the entries. I'll be giving you 3 entry types, right? 3 types of entry, and I'll beg you, in the name of whatever you respect, just pick one of them and stick to it. Whichever one you pick, it will not give you some setups some days, right? But it will give you setups. Just pick one, right? So let's go down to lower time frame and look for examples of LSB, right? And I'll be looking at LSB. Today we're discussing just LSB. We're not looking at the other conditions like taking out yesterday's load, happening on Q zone and all the likes. We're not doing that, right? Just LSB. So I think I have a good example here. Here we have this order block. We have this order block, which happened on this particular date. This happened to be, just a moment. Let sorry guys, 1 minute. Let me create a new share, make it a basic share so you can see the bottom of the screen. All right, so this happened on the 3rd of November. This happened on the 3rd of November. So when I go down to 15 minutes, on the 3rd of November, 15 minutes, 3rd of November on USD Chef, Third of November, 03. All right, 3rd of November, USD Chef. So let's see that. Okay. So here we are. Price traded down. This was the initial down move. Then price traded back up into the order block. I need you guys to see this. Price traded down. That was the order block. Let's go back to daily so you can see it clearly. This bearish candle created the order block, right, on the 2nd, right? Then on the 3rd, on the 4th, price traded back into the order block created on the 3rd. We'll go back to 15 minutes. 15 minutes, right? So the 3rd, the order block was created. On the 4th, price traded back into the order block created on the 3rd. We will be looking. You mark your order blocks on the bigger time frame. You mark your order blocks on the bigger time frame. We're trading strictly. I know I have about 26 videos on YouTube detailing how to trade order block source and all of those stuff using the 4-hour time frame. I'm saying that when you use the daily time frame and the weekly time frame, it does 3 things for you. Number 1, it reduces your screen time. You know exactly what to do the night before if you are in my time zone, right? the WAT time zone. You know exactly what to do. Once New York closes, you know if you'll be looking for buys or sell. You just know already at the close of New York. So number one, it reduces your screen time. Number two, it gives you the ability to have a 1:3 risk reward ratio, right? You have higher chances of having a 1:3 risk reward ratio when it comes to trading. Then number three, higher time frame order blocks gets violated, fewer times than H4 order blocks. The whole of September and November, we tried highlighting in SimplyPips that if you see a break in market structure, or what we call a source and a breaker on H4, if the source and a breaker on H4 is not responsible for a daily time frame market break, structure break, then assume that that is just a deep pullback and that the daily time frame trend is going to continue, right? So we're trying to help young guys. We don't expect newbies to be trading every time, just focus on the daily and the weekly. So here we are, price traded back into the order block. In fact, took out yesterday's high. We'll be discussing that tomorrow. Then notice that this was the last bearish candle responsible for this high. This was the last bearish candle before the push-up. Last bearish candle before the push-up. Last bearish candle before the push-up. We will be looking for that bearish candle to be violated. We'll be looking for this last bearish candle to be violated, and that happened here, right? That happened here. Once that violation occurred, we will be looking for reasons to sell. Our stop loss will be somewhere above, and this will be the entry at that level, right? If you do that, this is what's going to happen. You have, that point to this, you have 1 time your risk, 2 times your risk, and you didn't quite get 3 times your risk on this trade. But that's how you take the trade, right? You'll be in this trade for like 3 days on a sell, right? When we discuss the other candlestick patterns, you would find out that you could have gotten an entry when this inside bar here was violated. But let's leave that. We're discussing LSB here, right? LSB. So LSB, I won't be looking at other blocks again. I'll just be explaining LSB alone for now, right? So let's say we are in a downtrend, and this is the downtrend. Then you all of a sudden have an uptrend. And why would we call this an uptrend? This is a push up, a push down, a push up, right? It's like creating, when do you say trend has been formed? When you have 2 consecutive highs and lows. So this is a low, this is a high, right? This is a higher low, this is a higher high. That is an uptrend. So when price breaks this structure, in other words, price didn't create another higher high, but rather created a higher low, you will now be looking for reasons to sell, right? So your trade will be stop loss here, and you're going down, right? That is the concept of LSB. This is the concept of LSB. LSB is just a fanciful name of saying a break in market structure and in a lower time frame. But we will be looking at that break in market structure happening inside an order block. We'll be looking for that break in structure to happen inside an order block because it gives us higher possibility of hitting our targets, of the trades moving. LSB occurs everywhere on your chart. but you are interested in taking an LSB inside an order block, notice this massive move to the upside that happened here, right? Notice this massive move to the upside that happened in this place. Let's go down to the daily and see if this happened in another block. So when we go to the order block, right? Okay, so this took out this low, right? And then pushed up. It didn't quite happen in an order block. But we want to restrict ourselves to trades taking place in another block. Let's do one more example, and I'll quickly talk about the candlestick patterns we'll be looking at. Now, I want somebody to suggest a pair. Just suggest a pair, please. Yeah, John Michael, D1 and W1. You can do it on monthly time frame, but that'll be. Somebody said AC, so let's start with AC. AC. I mentioned to you guys, we don't cherry pick, and that's why sometimes it looks like we get lost. Life doesn't give you the opportunity to cherry pick. If it did, I'll most likely be the firstborn of Bill Gates. Unfortunately, I'm not. All right. So notice this. This is an order block, and price trades into it. When we see an order block, we are happy. When we see an order block, we are happy when price trades back into it. We are happy because we know we would soon get a setup. And you know the funny thing about an order block? If price violates your order block, we'll be discussing this properly when we start discussing our new system. When price violates the order block, you are also happy because now you can trade the opposite direction. But let's focus on this for now. So we have, sorry guys, let me just clean this up. Objects, take them all off. All right, so we have this order block. I magnify again so you can see. We have another block here. Now notice here, we're not discussing Wyckoff. We're not discussing Elliott wave. We're not discussing what are those other things people like discussing now. Who can help me out? Can you give me two other things we discussed that causes a lot of confusion? Yeah, Francis, bless God for you. We are not trying to beat, most people that try beating the market maker, they get beaten by the market maker. Yes, we are not discussing the shark patterns and all the harmonics and the likes. We're just looking at other blocks. The dinosaur patterns and the butterflies, right? So here we are, we have this other block. When we discuss the new system, you might see that we might have gotten an early entry here, but let's leave that. Price traded back into this place. This happened to be price trading back into this region. For the sake of clarity, permit me to shade this area a little. I'll be shading it a little. All right. So price traded back into this region. This happened to be 30th of October when price traded down. Notice that this is a daily time frame. When we go down to 30th of October, your 1 hour, your 30 minutes, your 15 minutes would have told you that you are in a downtrend. In fact, your 1 hour will make you draw something that looks like a trend line, delineating a downtrend. In fact, let's check that up. 30th of October or thereabout on 1 hour. So if we go to 1 hour, what happened to this MT4? If we go to 1 hour now, right, we go to 1 hour, 30th of October, 2020. Boom. What will you see? You can basically draw your down trend, right? You can draw your trend line and say we're in a downtrend. And I tell you the truth, you are actually in a downtrend. right? You're actually in a downtrend. But when you trade order blocks, you know that when we have a bullish order block, we anticipate a downtrend so that we can buy. So you don't get afraid, you don't get unhappy simply because you missed out on the sell. You are waiting for a buy. So anybody can tell you AUD card just dropped nicely. You know those words they use on some Telegram groups, and if you are in a Telegram group and you notice we don't um, try to, we don't care if people join and leave. We will not help you become toxic. Some people say, and AUD card dropped nicely, sweetly, and some big times, and when you check, it just dropped 20 pips. Right? But here we are. Price was making a downtrend. Notice this. Notice this. Price pushed up, came down, came down, came down. This is a downtrend. We are happy when we see this. If it was a downtrend in 1 hour, imagine what it would look like on 50 minutes. Massive downtrend. But you and I know that from the daily time frame, price is trading back into a bullish order block. We will be looking for buys when it trades into this bullish order block. We will be looking for buys. By the way, when price made its move up after creating the bullish order block, where did price make a U-turn from? Price made a U-turn from a bearish order block. Price traded down, pushed back into the bearish order block, sold off from the bearish order block, and then we bought from the bullish order block. So if you understand this concept properly, when price traded up, we will be looking for an LSB here to sell, then an LSB here to buy. Right? Makes sense, right? So let's go down to 15 minutes and see how we would have taken our trade. Somebody is asking me, on a scale of 1 to 10, how often does the order block get violated in the daily time frame or time frame? If you ask this question in any Telegram group and somebody gives you an answer on a scale of 1 to 10, delete that Telegram group, delete it, and burn your phone and buy a new one. You are in a scam Telegram group. If anybody gives you an answer on a scale of 1 to 10, guy, delete the Telegram group and run very far away. That guy is telling you that he controls all the market makers in the world. Oh my. Nobody has an answer to that question, my brother. Neither do I. So let's go down to 15 minutes. Oh my. Anyway, it's possible some of you here have the answer to the question. Please just respond. But I know I don't. All right, so we're looking at 30th of October, 15 minutes, 30th of October. Here we are on the 30th of October. Price traded straight on the, where is it? Sorry guys, I seem lost somewhere. Price traded, let me be sure. Price traded, yep. No, okay, no wonder. This is 2nd of November. Price traded 2nd of November. Thank you so much. 2nd of November. So back to 15 minutes. On the 2nd of November, which is this level, price traded into the order block. And when price traded into the order block is a very perfect example. Price traded into the bearish order block, we would have had something that looks like a breaker right about here. We would have had something that looked like a breaker right about, right about here. And LSB, I beg your pardon. If you are taking this trade, price would have taken you out. that's going to be a losing trade. And there is nothing we can do about it. Practically nothing we can do about it. You would have some losing trade. And when you have a losing trade, you simply go back and look for another entry. Not what most people do is that when price hits their stop loss, then they will go in for a sell. Then price will hit the stop loss the second time. Then they go home and sock, right? You are looking for only buys. Price has violated your stop loss, and price didn't create any other order block. Notice, price didn't create any other order block on its way down. Price finally created, LSB. Price finally created an LSB here. This was the last bearish candle response for this low. Price took it out, and now you are a buyer with your stop loss some pips above that, and your entry somewhere here. And now you are going 1 hour, 2 hour, 3 hour. Have you recovered the one loss you made? Guys, would we have recovered the one loss we made? We would have recovered it. Even if we had 2 losses, we will eventually have recovered it, right? So we are not scared of losing. We are not, when you are scared, most times when you are scared of losing, then you don't take a trade. When it breaks that, once you wait for the candle to close, guys, please wait for the candle to close. Wait for the candles to close. Don't assume that, okay, price has traded outside, therefore an LSB has occurred. No, wait for the candle to close on 15 minutes. You can do this even on 5 minutes. You can do this down even into 1 minute, right? But we'll be leaving that for the first class. So once this happens, you are willing to take your trade. You would have recovered. Now that takes us back to this level. We could have multiple losing trades. I'm playing with this again. I'm going to make this again. Boom. You notice, guys, that we've not had one negative yet. We've not had one negative implication yet. We've been having positive implication, and we've done this over 10 times so far. We've done this over 10 times so far. No negative implication yet. No negative implication yet. It's all been positive. It's all been positive. No negative implication yet. Oh, finally, we got one that gave us something that looks like a negative implication. And at the end of the day, it was still a 2% growth. Still a 2% growth with a 36% winning rate. It was still a 2% growth, right? After 25 trades. So guys, please, that's how we roll. When we meet tomorrow, we will be looking clearly at some other candlestick patterns, 5 candlestick patterns that you can use to refine your entry even more. We'll be looking at 5 candlestick patterns, and we'll add just one line on our chart called the 20 exponential moving average. We'll add just one line on our chart added to those candlestick patterns, and then you have your second way and your third way of taking your trades. I'll leave room for 2 questions, and yeah, somebody said, how will I have taken the trade if there was no retest? It all depends on you. You could wait for a retest. You could do break. You could trade breakout. When there's a breakout, you just take trade, right? Do we still have to look on behavior of pairs, or we can choose 4 pairs that you like and trade setup? See, with this strategy, life is easy. I'll quickly paint how you need to do this. Once, if you want to focus on weekly and daily time frame, once the week ends, Saturday, Sunday, you simply go and look for the nearest order block. If you are on TradingView, set your alert. We also have MT4 indicators that can help you send alerts as push notification straight to your mobile device. So if you're on a weekly time frame, once you see a weekly order block, you just set an alert there and take a walk. When price arrives there, it will send an alert to you, and then you now have that pair added to your watch list for that 2 or 3 days. With this strategy, sometimes you need to wait 3 or 4 days for your setup to show, right? If it's the daily order block, you simply wait for New York to close. When New York closes, yes, for now, right? If you are, in fact, I'll be announcing it in the next fostering class, guys. Usually we say you should have spent like 1 year trading. The next fostering class, we will be taking semi newbies. And why I'm saying semi newbies, that I expect you to know what order block is. I expect you to know what PIP is and everything. It turns out that teaching guys who haven't learned Wyckoff, BTMM, ICT, snake in the monkey shadow, and all those other strategies, it seems like it's easier to write, to write in their minds than the guys who see several things, right? They see several things. If you are taking your trade, you see a fair value gap. After the fair value gap, you see equal high, then sometimes you see that something, guys, right? So I need to wrap this up now. When you're in your daily time frame, if you want to use your daily time frame, all you need to do is simply wait for New York to close. I'll give you an example. I must wrap this up tonight. So let's say you're on a daily time frame. All you want to do is, at the end of New York, you check, do I have another block here? Yes, I do have another block. This was a bullish candle, bearish candle, violated by this bullish candle here. So on this day, which is basically the 30th of December, you would have had AUD card on your watch list with an alert set at this level. And when price trades into that level, you'll be looking for an LSB to buy. And that's all. Sometimes we need to wait for 2-3 days. On that same day, now let's say we are using this day, which happens to be 30th of December. You open another pair at the close of New York. Do you have a setup? No. Go to the next one as at that time. Do I have a setup as at this time? Yes. I can see a bearish order block, and I'll be waiting for price to trade back into it. And there is it. This is the trade back into your bearish order block, and this is your sell. So you would have been selling a Euro AUD today. You just simply would have gone to 15 minutes time frame or 5 minutes time frame and be looking for an LSB today to take your trade. You would have been looking for an LSB today to take your trade, right? And here you are, price traded into the order block. That black line there is the order block. This is the last bearish candle responsible for your high. This is the break, and you're in your sell. As simple as that. Very, very simple. Guys, it's 10 o'clock. I have another meeting for 10, and we have to leave. Yeah, like I said, with this strategy, you can trade up and down, right? But if you're trading against the trend, you should know that you won't have the possibility of hitting, you scarcely will hit your full ADR for that pair, right? So you should do that if you're willing to scalp, right? But for new guys, just trade order blocks, and I assume that you don't know what the trend is and all that. I want to appreciate some other admins we have here in the house. We have Prof in the house. For those of you who don't know, you get to know Prof more. And we have somebody that will be doing some wonderful things together in the house. Doc Taber. Doc, are you around? Prof, are you guys on? Say hi to the house.
Hey, what's up, team?
Hey, Doc, nice to see you.
Likewise.
Hope you're driving.
No, I'm parking right now. I'm good.
Oh, great. So guys, we'll be having some very wonderful things happening later this year. You don't want to miss this out. Go call all your friends and who've been doing accounts up and down to join SimplyPips. We'll be doing some wonderful things together with October and Prof and everyone. And you don't want to miss that out. Prof, you around? Hello, Prof. All right, Prof might have taken his leave. So guys, thank you all. We see again tomorrow. Same time, 9 p.m. and we'll wrap this up. Yeah, nice to see Dog. Yeah. You guys will be mind blown when we keep start this sometime maybe next month or thereabout. So yes, thank you for coming. Let's go make some noise in the Telegram group. See you guys later tomorrow. Bye-bye. All right, all right. No problem. No problem. Oh.